Hello everybody, this is AK. I'm back. So on the screen you see the title for today's video, our win rate as investors, win rate in inverted commas. The phrase is borrowed from the gaming community. Win rate refers to how often we win and how often we lose in a game. And when we are new to a game, chances are we are going to lose more often than we win. Right, and hopefully as we spend more time in the game, we get better and our win rate will improve. Right, it should improve as we become more familiar with how the game works. Right, and of course, as investors, this thing about win rate becomes more sensitive because we are not talking about in-game currencies, right? We're talking about real life money, right? So we're using real money. So which is why if we are trading, or if we have been trading the stock market, we remember maybe when we were new to this activity of trading in the stock market, some gurus would advise that we do some paper trading first. So before we get good at reading charts, do some paper trading first. So we test our skills. And once we have a higher win rate, then we start trading with real money. Okay, so that's from a trading perspective. Now, from an investing perspective, that's a bit more difficult because trading, you can talk about day trading, you can talk about trading over weeks and over months, but when you invest, usually we don't see results that quickly, right? Which is why some value investors will tell you patience is sometimes the hardest thing, right? So you can do paper trading, but it's a bit silly to do paper investing because it'll be many years before you know whether it's going to work out, right? So but you have to ask still the question why or how it matters, your win rate as investors. Why it matters is quite self-explanatory, because if we win more often than we lose, then chances are we'll do better than someone who's losing more often than they win, right? However, it's also important to ask how it matters, because if we're winning more often than we are losing, and the wins are small positions in our portfolio, and when we lose, we are losing in the big positions in our portfolio, then we could end up being worse off than someone who is losing but in the small positions in his portfolio, but winning in the large positions in his portfolio. So you see what I'm trying to get at. Yeah. So when you take a step back, what I'm trying to say also is that as investors, what we want to focus on is performance at a portfolio level, right? Individual stocks, they form the portfolio, they require attention, but when we look at performance, right, overall we want to look at the portfolio level, right? And just remind ourselves that we cannot get it right all the time. There will be sometimes we get it wrong, right? Some stocks will turn out to be mediocre or not, or don't do very well at all, right? But don't feel too sad when we get it wrong. Right? It is natural to feel disappointed, but remind ourselves that we are only human. We are not all-knowing, right? So it's precisely because we are fallible that we have to take precautions against being overly optimistic or overly pessimistic, right? It's because we are human, we have to be pragmatic, right? If we are serious about investing, and if we are serious about making money as investors, right? I emphasize that. So I always say that we should focus on our performance at a portfolio level. That means don't be overly fixated on the performance of any single stock in the portfolio, right? And of course, if our portfolio consists only one stock, then there is no difference. Right? Your portfolio is that stock is your portfolio. Of course, that's not something that I would do lah. And I've said this before, that betting on a single stock to do well, to 10x or 20x your money, is gambling, right? That's why it's called betting, right? It's not investing, right? So as I just now I say, my emphasis is on being an investor and not being a gambler, right? So if you are a gambler, then this video you have come to the wrong place, right? Anyway, readers of my blog would know that I published blog posts before about my largest investments. From time to time I'll do that, and the screen capture is from one of those blog posts. And you see that $500,000 or more, there are two items listed in that category, CPF and OCBC. And if all this looks very familiar to you, you can stop listening to me now. But if you want, then okay, here we go. Continue. I am doing this video more for the benefit of newer viewers, people who have found my channel or my blog more recently, so they're new to ASSI, right? So anyway, now we'll talk about look at the top investments in my portfolio. The top investments in this video will refer to those which are $200,000 or more in size, right? The first one you see on the list is actually CPF, but I don't really consider that as an investment in my portfolio. It is more a safety net, but I included it in a blog post because it's really something like a bond, right? Like an investment grade bond. It's risk-free, it's volatility-free. I always say it's a bond that will transform partially into an annuity by the time we are 55, right? And it's a safety net. So if all else fails, I have my CPF, right? And having a quality fixed income. So CPF is risk-free and volatility-free, right? And it pays reasonably well even in today's high interest rate environment. And it gives me peace of mind. Okay, OCBC is next, and is my largest investment in a business, right? It's more than $500,000 in market value easily. And the next one is I.R.E. Global, and then AA-REIT or AIMS APAC REIT. These two investments are roughly the same size, but with the recent rights issue, I.R.E. Global is now a bit bigger than AA-REIT, AIMS APAC REIT. And of course, I.R.E. Global is a more recent investment compared to AIMS APAC REIT. And it's an investment which I say earlier that's a bit disappointing. But there is fundamentally nothing wrong with the investment. It's just that it's currently having some challenges. Right. If you're interested to know more about I.R.E. Global, I have videos on this. I've also blogged about this before, about the challenges that it has right now. But fundamentally, it's a strong and sound investment. And if we are patient enough, and we'll see that it will not go kaput, right? Unlike some other REITs, which I think will go kaput, I.R.E. Global probably because I don't know everything, will not go kaput, and it will still continue to generate an income and you'll still pay me. AIMS APAC REIT is of course something that has been in my portfolio for more than 10 years since the global financial crisis, and being almost the same size as I.R.E. Global, it is a very significant income generator for me. Of course, regular readers or viewers will know that this position is by now, for a long time, for some time at least, free of cost, right? And it's still generating free money for me. Then the next one, DBS. I should mention DBS with UOB because the two investments are roughly the same size. DBS, of course, I entered in 2016. Back then I started in putting money in DBS to invest in DBS at $13 to $14 a share. So that decision has turned out to be very rewarding, and because it's one of my more significant investments, one of my largest investments, in this case, like say more than $200,000 in market value, this is a huge boon, right, to my portfolio. Then UOB, I only started in during the COVID-19 pandemic at $19 a share. I kind of waited for the dust to settle before I bought into UOB during the pandemic, because I didn't want to keep buying as the price dropped, right? Because I didn't know when it would bottom, and from a technical analysis point of view, we only know when a bottom is formed after the fact, right? So I waited for the dust to settle. I waited for the stock to start bottoming, right? And then when it rose, that gave me an indication that the bottom might have been put in, and that's when I got into UOB, and it was at $19 per share, and I went in aggressively over several weeks, and it was total of about $200,000, right, put in at $19 or so per share. And the last time I added to my position in UOB was about $26 per share. So I've put in more than $200,000 into UOB in terms of capital, and by now, of course, is worth a lot more, right? And the next one is Wilmar. Wilmar continues to be undervalued, but unfortunately it's a conglomerate kind of stock. So unfortunate, because conglomerate usually will have a conglomerate discount. So even though it's undervalued, right, chances of it being traded at its fair value is not high. Right, so the way Wilmar rewards shareholders, or it can reward shareholders, is number one, through dividends, and Wilmar has been a very consistent dividend payer. It pays dividends through good and bad times, and shareholder friendly. And number two, it can also unlock value for shareholders by monetizing some of its subsidiaries, right, through public listing, which it has done for its joint venture with Adani in India, and he has also made the IPO for his Chinese subsidiary. Just 10% of its shares were sold to the public, and that unlocked value. So if we are invested in Wilmar, right, you really have to be patient, right? And it's about the income that we receive regularly, and also the occasional unlocking of value. I think it's hard to expect Mr. Market to ever pay for shares in Wilmar at what we think is its fair value, which I've said before is probably closer to like $7, and some people might even say closer to $10, but I won't go that far, right? But most research houses were saying there was like more like $5+ to $6 per share, right? And even then, that's still at a discount to what they thought might have been the intrinsic value, right? So if we look at all these largest positions, more than $200,000 in value in my portfolio, recap, just ignore CPF. Just look at OCBC, I.R.E. Global, AIMS APAC REIT, DBS, UOB, and Wilmar. If you look at these 6 stocks in my portfolio, which are at the top of my portfolio, right, these largest investments, or our largest investments, will have the largest impact on our performance as an investor, right, on the portfolio level we're looking at, right? And so you can tell from what I've just said, what I've just shared, that I've not done too badly, right? My OCBC position has made significant gains, DBS significant gains, UOB significant gains. AA REIT, like I say, is already a free of cost per position, and I'm still getting free money. Wilmar, that one is more or less just what you call shuffling along. No big gains, no big loss, and it's just paying me. And I.R.E. Global is the one that has lost money. It's still losing my money, And even though it's still paying me, right? But it's the fact that it's paying me, right, that is comforting, whereas I'm being paid to wait for things to improve. So overall, I'm not really concerned with market prices of my investments, because I think I'm doing pretty okay, right? And if you take a step back, right, what's the one point that all these stocks have in common, right? The big picture is that they are all generating income, and I'm getting passive income by staying invested in these 6 large investments of mine. And I do not have to depend on Mr. Market's moods, you know. If I because I don't have to what do you say, I don't need to sell my investments in order to have some kind of spending money as a retiree, right? So I'm not at the mercy of Mr. Market, because I have money coming in regularly, right? So I'm less affected whether prices move up or down. Especially if prices move down, I'm less affected. I don't feel depressed, right? Because I have money coming regularly from my investments. I don't have to liquidate my investments in order to get paid, right? This is why I can stay, or this is why I can enjoy being unemployed for the last 8 years, and I can probably stay unemployed for many more years, if not forever. Right? So this is the strategy, my strategy, and how it has worked for me, and how I approach, right, investments, and how I think looking at portfolio level performance is more important, and how we should how I prefer investing in stocks that are able and willing to pay us a dividend, right? So this brings me to 2 comments by viewers. One of them said, can you show your portfolio? Or like some YouTubers say, you never lose, you only win. Entry cost always 0. Win liao lor. Okay, this is a very sarcastic comment, right? And I've said before that recently that I'll stop replying to rude comments or trolls, but I just made a reply anyway, and I'll share with you what I said. I said, don't believe anyone who says their win rate is 100%. I have said before many times, I have been wrong before. Like Peter Lynch said, in this business, we can never be right 10 out of 10 times. If we are right 6 out of 10 times, we should do better than most. As for showing my portfolio, why should I? I am not here to convince anyone that I am a guru. Okay? So if I'm also making these videos just in case people ask me such questions again, I will just reply them with a link to this video. Yeah, but if you have been following my blog for a long time, you know I do share, you know, what are the things that are in my portfolio, but only the largest investments, right? I don't like people I don't like the idea of people copying my investment decisions down to the last dollar or the last cent, right? That's not what I want to do. Okay, I'm here primarily to inspire and share my philosophy, my methodology, and then readers or now viewers make their own decisions. Okay, I'm not a guru. I've always said I'm not a guru. So as another thing that we have to remember, right? We have to take ownership of our own decisions, right? Don't abdicate responsibility, right? And another readers, just 3 words and all in caps, and in gaming we call that shouted, when show portfolio. I thought that was pretty rude, but to that comment many viewers replied, and on my behalf, thank you so much. I really appreciate all the kindness. But I also said to a viewer that long-time readers of my blog would know the truth, because the people who replied on my behalf, I suspect they are long-time readers of my blog. and long-time readers of my blog would know the truth. And you folks are a big reason why I will continue making videos. Okay, so I hope this video has been helpful. Remember, what AK has achieved is not a miracle. It took years, it took decades, right? And always be prudent, be patient, and be pragmatic. If AK can do it, so can you. Bye-bye.